Give us the 10,000-foot view of what's going on in China. Is it a crisis? And how big is the stimulus possibly that's coming? How big do you think it could be?
You know, Frank, what's happening in China right now is a recovery that has just absolutely disappointed all expectations. China is not collapsing, but the climb back from the deep economic hole that the country was in through the last couple of years has been so poor that markets seem to have given up all hope on an organic recovery and are instead now looking for Beijing to announce a big stimulus rollout. That's where I have to caution investors. Newsflash, you're not going to get a big stimulus coming out of Chinese authorities. What we are going to continue to see are very targeted measures to help the property market, and monetary policy easing has already been happening, but it's going to be much more fine-tuned and narrow.
All right, so Shazad, here goes to the news flash. You're saying no big stimulus coming. So does that mean no stimulus or no giant package that it seems like a lot of U.S. investors at least are expecting?
Yeah, no giant package at all, the type that we have been trained on in the post-GFC world to look for in China.
So some stimulus.
We're not getting the big development projects.
So some stimulus then. What areas do you expect to see some stimulus in?
Well, first of all, I think there has been monetary policy easing going on, stimulus going on in plain sight in China. The real problem, Frank, is that companies have been basically uninterested in borrowing, despite the fact that borrowing costs have been falling for the last several months. I foresee particularly that type of easing taking place. I think much more accommodative policies in the property sector to encourage people to finally get back into the market and buy homes. So easing on mortgages, easing on buying second homes, and that sort of thing, expanding that out to more cities.
All right, so I think the next natural question is about contagion. Is there any risk of contagion here in the U.S. markets or the European markets, just the global economy? Obviously, China is such a big player in the global economy.
I don't think so. Look, foreign investors have already known that the exposure that they have to the Chinese property market writ large is under severe amounts of risk. We've known this for the last couple of years now, at least. And so I don't foresee contagion within China, and I don't necessarily foresee contagion of the type where we think of, again, in the financial crisis context out here. That said, foreign investors, including American investors, are going to be the absolute last people who will ever get paid, if they get paid at all, when it comes to these Chinese developers who are struggling to repay their debts.
All right, right now we're looking at Chinese tech stocks as well. We're seeing Alibaba down about 3.5%, JD.com down more than 5%. I also want to talk to you about the Biden executive order, something you've already written about. What impact do you see that having on China, and then also on this kind of interesting relationship between China and Europe, where Europe seems to be trying to get closer to China as we seem to be de-risking or decoupling, depending on how you look at it?
Yeah, the Biden executive order on outbound investments has what it's done. It's created a notification mechanism rather than a restrictions mechanism, which is what initially it was supposed to be. And I think the impact is going to be very minimal. It's already riddled with a lot of loopholes. And over the next year, as the comment period gets in, I think a lot of the rules around the restrictions part of it will be further diluted. I don't think markets need to overreact or be too concerned about the executive order. Quite frankly, I think it's a win for industry, and so no need to panic.